Financial industry employs almost 500,000 people here in New York City, and now Wall Street is leading an effort to make the Big Apple's economy stronger and even more diverse with the FinTech Innovation Lab. It is a seed program for startups that serve Wall Street. And here to tell us more about it is Maria Gotsch, President and CEO of the New York City Investment Fund. Thank you so much for being here.
My pleasure. Thank you.
So this project is backed by 10 of the big banks. You're looking for financial technology innovators. What kind of products are you hoping they'll develop?
So we're looking for the next generation of cutting-edge financial services technology products. We're hoping that great entrepreneurs apply to the program. So we're looking for things that deal with data management, security issues, collaborative tools or social networking tools that can be applied to the financial services sector. But we've left it open, and we're really looking also for the next great big idea.
It all sounds like it's already been invented. It's the Bloomberg terminal that you're talking about.
Sounds like you're looking for the next Mike Bloomberg.
Well, perhaps, yes.
Let's talk about which banks are working with you on this. I mean, obviously, if you find something that's such a great tool, they're going to want to grab hold of it, right?
Well, so during the 12-week program, the companies will have access to the technology departments of the financial institutions, as well as access to the potential user group. So to give feedback to that entrepreneur to help them develop their product. So hopefully we're going to take the development time down from 18 months to the 12-week period. And all the banks have agreed that it's hands-off for the companies that are going through the program until the end of the program. And then it's the free market will take over. And then those companies can go off and then find the customers and hopefully find the next round of financing. But during the program, everybody's agreed that this is sort of a protected period of time.
And these entrepreneurs are going to have access to the CTOs of these big banks, right?
Absolutely. Not just to the CTOs, but also to the user group. So if it's a system for the trading floor, they'll have access to the traders. If it's an information tool for the investment bankers or the analysts, they'll have access to that group and get real-world input from a potential user while they're developing the product.
It sounds like a phenomenal chance for the inventor, for the innovator. Who gets to take part in this program?
So it's an open application. Applications are due at the end of January, and then they will be reviewed by the banks, and they will pick the top ones that they're interested in sort of shepherding through this program. So it's open to, you have to come to New York City, because this is about building up New York City's financial services tech sector. But once you're in the program, then, as I said, you get that unparalleled access.
Are you expecting a lot more people from Emily's Revere? Are these West Coast people you're expecting, or are they going to be a lot of guys who already are down on Wall Street working for these banks?
It could be a combination. There's actually an interesting burgeoning financial services tech sector in New York right now. So we've got some good entrepreneurs who've been successful once, and we're hoping that some of those apply who realize that to get access to 10 of your potential customers at one time is a pretty important thing.
So the idea here is stimulating innovation.
Absolutely.
Keeping entrepreneurs in New York City. As Matt mentioned, I cover Silicon Valley. A lot of the entrepreneurs I talk to say that they feel like they need to be in the Valley to get access to the best talent. Why should entrepreneurs stay in New York City?
Because this is where their market is. So the largest majority of the major financial institutions is in New York City. So at the end of the day, those entrepreneurs have to sell their product and have to get a buyer or a CTO or CIO of a big bank to say, yes, that's a great product, it solves a problem. And those people are in New York.
And you guys also have a similar competition for biotech startups, right?
Exactly, yes. So we're funding the research that's at the university that's almost ready to get sent out to the private sector. So it's the scientist that goes to the venture capitalist and says, I've got this idea, I've got a potential product, and the venture capitalist says, love you, love the science, but I can't fund you right now. Go off and do ABC and then come back to me and I'll fund you. So we're funding that ABC. It's the proof of concept gap.
What kind of terms then does the winner submit to as far as funding for his project? I mean, do you get a stake in that? Do these banks get a stake in that? What is he looking at the end?
The banks will not get any equity stake, but the group of venture capitalists, there are a total of 7, including ourselves, who are putting up a small amount of money, and so they get a small, that money converts into the next round of financing. So it's a very small stake.
Let's talk a little bit more about your strategy. What kind of companies are you interested in, the New York City Investment Fund?
We're interested in companies that create jobs. So that is our mission. And we're interested in both for-profit and nonprofits that create jobs, both in the tech sector as well as in inner-city neighborhoods, and those companies that help employ low-income people. So it's a pretty narrow geographic area, but a pretty broad mandate within that.
So are you only looking right now in finance and biotech? Is this about biotech and Wall Street, or do you look to other areas of innovation as well?
So our two main areas of focus are bioscience and financial services technology, but we will look at other things as well. We're not investing in digital media because that sector, as you know, is very healthy and very vibrant. So we look for where things are not working quite as well, because we have long-term patient capital that can take a higher level of risk than the private sector can, but the idea is to create conditions so that the private sector then says, all right, we're ready to come in with our trillions of dollars.
And here's a good selling point for New York City. Some statistics: New York is responsible for creating 7.5% of new private sector jobs this year, though it accounts for only 3% of the population.
Yes. So New York is doing well relative to the rest of the country. We still are not where we'd like to be, obviously, but we're hoping that programs like the BioAccelerate program, the FinTech Innovation Lab, and some of the things we're doing in the nonprofit sector will help create jobs to get us back to a level of employment that we would all like to be at.
All right, thank you so much, Maria Gotsch, President and CEO of the New York City Investment Fund.